What's going on, everybody? It's your boy James, and today we're going to be discussing the 7 strategies on how we can help you save $25,000 or more when buying. So let's get it. Okay, guys, so the first strategy is that you want to save a larger down payment. The more money you put down on a house, the less you have to borrow. This means that you can save thousands and thousands of dollars on interest through the life of the mortgage. Very important. Okay, the second strategy is that you want to shop around for your mortgage. Remember, not all mortgages are the same. So some mortgages have higher rates and some have lower rates, depending on what type of mortgage you end up getting. So be sure to shop around for mortgages and find the best deal. Be sure to compare the rates, be sure to compare the APR, be sure to really compare the origination fee, okay? Don't be afraid to negotiate the terms down, okay, guys? We get a lot of mistakes from buyers that they don't ask for lower rates and try to negotiate for that rate to be lower. Okay, so the third thing to save you $25,000 or more is to avoid paying private mortgage insurance. Guys, typically private mortgage insurance is known as PMI, and this is the type of insurance that lenders required if you're putting 20% or less down on a house, okay? So if you want to avoid lesser PMI, try to increase your credit score. That's going to help you guys a lot, okay? Also put more money down. The more money you put down, the less you don't have to put into your monthly payment. You don't have to worry about the private mortgage insurance, okay? Sometimes private mortgage insurance can range between $50 all the way to $300, depending on what type of loan programs you end up getting. Okay, so the fourth thing is that you want to look for government programs that can help you with your down payment. Guys, there's a lot of down payment programs out there, government support programs out there for first-time home buyer. If you are struggling with down payment, there's programs like, CalHEFA, teacher doctor grant programs like the first responder programs. Also, you want to look at potentially if you're a veteran, look at the VA program, so then you don't have to pay so much in interest, and also you don't have to put that much down. The fifth thing is that you want to make sure to keep your credit score high. The better the credit score that you have, the better your interest rate will be, okay? The interest is going to be what's going to save you thousands and thousands of dollars, and not only interest, but also the terms of the mortgage, okay? So when you have higher credit score, your PMI is a lot lower. So for example, we just did a quote we just shop around for one of my client, and instead of paying, $150 to $200 on PMI, because his credit score is 800, he ended up, getting a quote for $50 for PMI because his credit score is so high, right? And then, and he didn't even need to put that much down either, okay? So make sure to have a high credit score. The higher the better, okay? Another thing to consider when buying a home is also consider opting for a shorter loan term. Okay, sometimes people do a 30-year and the interest for that is pretty high, right? I mean, throughout the expand of the 30-year of the mortgage. So you want to do is you want to also consider talking to a lender that run number for the 15-year mortgage instead of the 30-year. Now, the 15-year mortgage sometimes is a little bit more higher monthly payment, but the interest rate for the 15 years is normally 0.5% to 1% lower than the 30-year, right? So what you want to do is you want to compare and see if the 15-year mortgage makes sense for you. A lot of times it doesn't, because you want to keep the monthly payment a lot lower, and then you can use that cash to invest in your business. Compare your options, the 15-year mortgage versus the 30-year mortgage, and see which one fits you the most. All right. Okay, guys, so the seventh thing is that you want to consider finding homes that are fixer-upper, right? So what are fixer-upper homes? So basically what you want to do, okay, is you could find a home that need a little work. It's not move-in ready. Like, for example, if the carpet, the paint, just, maybe the roof needs to be repaired. Also, maybe the landscaping needs to be repaired. That's why a lot of people are not buying. Maybe a home that is that the appliances is not updated and upgraded, and the light fixtures are not upgraded. Buying a home that is underpriced and that need a little work can and will save you thousands and thousands of dollars when it comes to buying because you have to look at it as your first home, and it's not your forever home, right? You're just looking to roll that money and making a profit of all that equity and to roll it into another house. Okay, so consider buying a fixer upper home, guys. If you guys want a fixer upper home and you guys want to buy a home, something like you can add value to, feel free to reach out to me. All right, we can help you guys find some really good deals out there. Okay, anyways, hopefully you guys find this video helpful. If you guys like this type of stuff, don't forget to like and subscribe to our channel. If you're interested in ways on how we can help you save even more, we'll make some other videos and we'll talk about strategies on how we can help you save more. These are just the loan and the mortgage terms alone. Feel free to reach out to us. Go ahead and book an appointment at buywithfam.com if you want to talk to us. Yeah, hopefully you guys enjoy this type of video. All right, guys, peace and love.